Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of Paris milling wheat, London UK feed wheat, and European processing potatoes. I'll start with Paris milling wheat. I'll only say this one more time, but it is one of the challenges I have from time to time using continuation charts as I do that every so often. You get some really big changeover gaps that wrecks all the careful trend lines, pitchforks and notations I've written. A little while ago it was Paris rapeseed futures, which was a great story in itself as the huge gap down was eventually filled. This time here was Paris European milling wheat futures, gapping lower back in early March. Lo and behold, this week the market rose enough such that it completely filled the gap. Outstanding. The move up 4 weeks ago was executed with a sharp about face and with a combined key reversal up and bullish engulfing pattern. This is where the recent rally started from. The latest iteration last week saw a move up over the short medium moving average, currently 212.5. The medium moving average, currently 214 even, and the 2021 50% Fibonacci line, also at 214 even. Indeed, yesterday's rise was only halted as prices approached the first downtrend. This week the market gapped higher over the first recent downtrend from late February, currently at 221.25, and on Tuesday over the 2021 downtrend overall, currently at 230 even, though prices did not close over it. The first downtrend will be retired after this commentary, but the second will remain, as though breached there as yet has been no close over it. I cautioned last week about these downtrends. Well, it seems I was mistaken. However, last Tuesday did see a long-legged indecisive spinning top, and prices have pulled back lower since, to finish the day today with an indecisive doji cross, while sitting on the Fibonacci congestion area 219.25 to 218.75. We now have some significant support below from the 50% Fibonacci line plus the medium and short medium moving averages. I'm minded to think that despite the way the market punched up through them, they may still be valid on any attempt going down. It would also fit that if the market wished to be lower, well, it had all week to get there. And perhaps now we may see the market going sideways or even perhaps higher. But overall, caution. London UK feed wheat. This contract was unique in all the markets I look at here. It was the only grains contract that had a monthly key reversal in March. In this case, it was a monthly key reversal down, and a good looking one at the time as well. Anyway, since then, we've seen prices recover with a horn bottom formed over the turn of March into April. And it was from this pattern that we saw them move higher. Not in a straight line, but with a measured move higher. And that's where prices reached their target and hesitate at the end of last week with a bearish dark cloud cover pattern. This hesitation was due to the newly drawn overhead middle tine, currently at 212.5, of the bullish Andrews pitchfork for the December 2020 to March 2021 move. Was this the attempt? Well, was this the end of the attempt higher last Friday? No. Monday saw a complex piece of action. Here we go. A combined key reversal up, bullish engulfing pattern, and a bullish open and close long white Mariposa. It was a quixotic performance as the upper tine remained solid. Just look at Tuesday's action to confirm this. Since then prices have been lower, yet still within last Monday's action and seemingly subdued. Question now is the same as last week. What next? Well, for the moment, apart from the bullish Andrews pitchfork, nothing jumps out, so we'll be especially interested in what happens near it, especially the upper tine. Should we consider another try there? I say this, but there is one thing that I wish to highlight, though it may not happen for a few weeks, if at all. You see, we've seen, and I use this phrase carefully, we seem to possibly be forming a bow tie formation of the moving averages. Specifically, the short moving average, currently 201.95, the short medium moving average, currently 201.60, and the medium moving average, currently 201.70. It's not wholly certain as yet, but it looks that way. Additionally, they are entering the bow tie in the wrong order, but I will allow some leeway for that. This will be something I'll be watching, and I'll give a better report upon it next time. European processing potatoes. Just before the Easter break, the market was trying to push down through the important April 2020 to date uptrend, currently at 7.8. In doing this, prices started running into the congestion below from the July 2020 to November 2020 move. However, 4 weeks ago, the market utilized this uptrend and turned around, back upwards. We had some interesting gaps on the way up, and a period of hesitation 2 weeks ago when the prices made contact once again with the lower trend line, currently at 9 even, the old falling wedge pattern from the February to March action. Prices nevertheless pushed up through it, and last week tackled the rising medium moving average, currently at 10.2, and the upper falling wedge trendline stroke downtrend, currently at 9.7. Last Friday, prices popped up and out and above both, only to run into the next obstacle overhead, the declining short medium moving average, currently at 10.2, and the 50% Fibonacci line of the whole move down from February at 10.5. This past Monday, prices gapped higher over all the previous congestion, a bullish opening white Maribosa. However, the move up was not sustained for the rest of the week, and we finished today below the 50% Fibonacci line and both medium moving average and the short medium moving average. Last week I wanted to explore the idea of a move up beyond the falling wedge. Well, this idea is no longer valid and has been retired. What is still valid is the recently drawn bullish Andrews pitchfork for the November 2020 to March 2021 action. Currently the market is in between the lower time below, currently 8.3, and the middle time above, currently 12.9. I suggest looking at these for the moment until a better option presents itself. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.